everybody. It's Z.S. Caravallo from ZK Research, and I'm here for another real-time recorder with my compatriot Dave Michaels. David's week 19, but it's actually our second real-time recorded this year. So, how you been doing?
I'm doing all right. It's been a tough week though. A lot of financial news. We'll get to that momentarily, but let's kick off with Avaya. I saw you write about Avaya.
Yeah, there's been a lot of financial news. One of the pieces of news that wasn't financial though was, and I think one of the more interesting things Avaya has done in the last little while is they've expanded their partnership with Microsoft, and that now their OneCloud OneCloud public CCaaS already ran on Azure, and they've expanded that to have OneCloud private or hybrid run on Azure as well. Their UC products also run on it as well. So this is kind of an interesting move for Avaya. I think in their customer base, which tends to be a lot of larger global companies that prefer hybrid or private cloud. In fact, that's where Microsoft sells much of Azure Stack, right? You can run OneCloud now in kind of any mode you want. You can do it all public, all private. You can do it kind of hybrid. And the other kind of piece that was in the press release that I thought maybe didn't get kind of the pizzazz of running in Azure, though, was the fact that they're on the marketplace. And when you're in the Azure marketplace, customers that consume OneCloud now will have their that revenue count towards their Azure commit to consume spend commitments, right? So from a Microsoft customer standpoint, if you buy OneCloud through the marketplace, you're actually fulfilling your commitment to Microsoft. That incents the Microsoft resellers to sell it. I know some people might think it's.
I think it's really interesting, but I was confused by that. Maybe you can clarify if you. But if it's in the marketplace, does that mean that it bypasses the channels, or do you know how that works? I wasn't clear on that.
Well, it goes up to the Microsoft channel, right? And then, but if you're an Avaya channel partner, you can still sell it through the marketplace. It's not unlike TalkDesk is in the AWS marketplace, things like that. And so that's actually, it winds up being a big thing because it creates exposure to a bigger audience of partners. And the Avaya partners can still sell it the way they were. They can sell it through the Azure marketplace, but this hopefully brings a new line of partners in. And it's an interesting kind of play for Microsoft and AWS, the TalkDesk, and the people look at that as, aren't they competing with the current products they have? And from an Azure perspective, all they care about is spinning the dial, right? The more the dial spins, the more they can build their customers. And so whether it's Teams they use or whether it's another partner or whether it's Avaya, the Azure team doesn't really care. They just want to get cycles on Azure. And so these types of partnerships always seem to work for the companies in the marketplace, and that was one of the things that I really liked about this.
Well, it was a nice announcement. I think we were both there at GITEX in Dubai. Let's see, I think that was 2019. I think it was 2019 when they announced the first relationship with Microsoft, and the OneCloud CCaaS that they had launched at that same event was hosted in Azure over there. So it's nice that they've expanded that relationship. I think that's great. I want to point out that this is a OneCloud Azure partnership, not a OneCloud Teams partnership. And so companies like 8x8, for example, has a certified contact center play with Teams. And I'm not sure if they have an Azure relationship or not, but this what Avaya is talking about is an Azure relationship, which is very important. And I know that Avaya has done some direct routing with Teams before, but I don't believe they have a contact center play yet at this time. But it's nice to see so much coming out of that effort that we saw launched, we also. In your article, you also mentioned the Alcatel-Lucent partnership. That's that same Avaya CCaaS OneCloud that Alcatel-Lucent Enterprise is now going to start reselling. So that's one of the bigger, I would think, one of the bigger innovations out of Avaya, for several years actually. So nice to see that getting some more momentum. They also announced their financial results. I gotta say, ZS, it's tough for anybody right now. I saw something yesterday. It said Apple stock is down 17.5% for the year to date, and that makes it one of the best performers in technology. And it's like, that's a little scary. Minus 17% is one of the best performers. So it's a brutal year out there for almost all the companies that we're covering. We're seeing huge losses in valuation. Not necessarily, and we talked about this last week, not necessarily momentum loss in the companies that we're talking about, but it's certainly been a tough week. And I don't know where you are with your crypto investments, but boy, it's been a tough week on the crypto side. We're not going to get into that one, but real tough week. So you want
if you look at some of the bigger name companies, right? Zoom, Five9, and RingCentral, their market caps have gone from 161 billion, 14 billion, and 40 billion to 28, 7, and 6.4 respectively. In fact, I was texting Rowan this morning. Under Rowan, the company's 16 for 16 in beat and raises. They've never missed a quarter. They've always put up numbers, and their market cap is a little under half of what it was at their peak valuation. And so they're doing what they can do, right? They're performing as well. And I think part of this is just, we've talked about this before, Wall Street's kind of misunderstanding that this was a group of work from home stocks, when in fact they are really hybrid work stocks. There's not a company out there that's going to bring all their employees back and ditch their cloud communications.
Yeah, I think we're well past the work from home whole thing. I think the whole market is going crazy, and I mean, I think unless you're Exxon right now, you're probably not doing so well in this market. We talked about that last week, but let's get into some of the Avaya results. You want to take the lead on that?
Yeah, you want to start with Avaya? Yeah. So this was a bit of a mixed bag, right? Their revenue did come up light. They were down about 2% from a year ago. They put up a number of 760 million, which missed consensus estimates by about 21 million. Now, I did talk to Jim Chirico, their CEO, after the call, and he kind of walked me through it. He said Russia and Ukraine did have an impact. If you remember, Avaya they're the oldest communications company in the world. They've got long established relationships in every region, including the Ukraine and Russia. They saw some money diverted away from telecom into other areas like defense spending, and that includes not only the Ukraine and Russia, but some of the other Eastern Bloc countries that are prepping for what might happen if Russia invades, right? So it's no surprise that they took a little bit of a hit. But he said the hit this quarter was somewhat minimal, maybe 5-10 million. Looking ahead, he expects it to be bigger, which is why they brought guidance down. Another big kind of impact for them was they changed the reporting, or the way they took some of the revenue. So if you look at the way they dealt with everybody before, it was through partners. Governments and large enterprises, they've brought direct in order to help them transition to cloud better. And without getting into ASC 606 regulations, it basically meant they were able to recoup less point-in-time revenues. So instead of taking 60% up front, they could only take 20% up front, and that did have a material impact. But if you look sort of between the numbers, there were some things I thought were positive. One cloud revenue is now 750 million. That was up 118% from a year ago. So, who would have thought that, so much of their business would be tied up in the one cloud product? We just, like you said, 2 years ago, we just got introduced to it at GITEX. They're expecting one cloud revenue to be $1 billion by the end of calendar 2022. And that makes one cloud revenue about the same size as Five9. Now, it's not apples to apples because Five9 is all SaaS and this is a mix of public and private. But when you look at every cloud revenue or metric they have, caps, recurring revenue, those are all up. They booked more than 3 million cloud seats this quarter. So I think what they're facing now is really the headwinds of change, where you've got a declining hardware business that's declining at a rate that's kind of at or where they're growing their cloud business, and they had some hiccups with global macro. So Wall Street really hammered them, and I didn't think the quarter, was that bad. They did put up a miss, and they did bring down guidance. But if you look at all the important,
their revenue was down, they missed estimates, and they lowered guidance, and those are three really bad things. And it's not like the industry is like that, right? And so, NICE just announced also this week they were up 15%. Their cloud revenue was up 28%. They beat expectations, and they raised guidance. Five9 was, I think, last month, and they were up 33%. They beat expectations, raised guidance, and they won a $40 million annual recurring revenue deal. So Avaya's kind of announced going against the trend, and that's why you said Wall Street beat them up. I mean, both
Yeah.
J.P. Morgan and Barclays downgraded them. I've got a number of concerns about Avaya. We talked about the innovation coming out of Dubai, but they're not keeping pace on the innovation side. There's I really like Spaces. I really like the new CCaaS products, but it's just not keeping pace with what we're seeing across the industry. I've been getting inquiries about, I guess they've got some convertible debt coming up, maturity coming up next year. They've still got this advance they got from RingCentral. I'm not sure if they're going to have to pay that back or not. I don't have access to that information, but I've been getting inquiries about that. What concerns me, and you just hit on this, was the transformation story, moving from hardware to software. They've been saying that for a while, but I got to say, I read Kevin Kennedy's book. Right, he wrote a book after he left the CEO role. It's called Public Private Public: The Transformation Imperative. And he talks in that book, he takes credit for transforming Avaya's business model from hardware to software and services. And so this story's been going on for, I don't know, he left in 2018, I think it was. So
Yeah.
the story's been going on for a while. It's getting a little long in the tooth. I really want to see Avaya do great. I think one of the point that you mentioned there was their one cloud business is a little different than other providers, and I think, I don't know, they've named all their products One Cloud, so it's really kind of hard to separate the CCaaS model versus the legacy model, and it's hard to know where they're at with what, because they converted that to a recurring software model, but it's the older architecture, and I look at these big wins from NICE and Five9, and they're certainly going into larger enterprises, and they're beating expectations. So that it's not as rosy as I would have liked to have seen it.
Yeah, but I think the easy thing to do, and this is where Kevin's book is a little misleading. The one thing Kevin didn't do was change the kind of sales motion there. While he did try and transform product, Avaya sales always fell back into selling one-time revenue to make the quarter. And I think I think from an Avaya perspective, when I talked to Jim, he's actually, when you look at where they had projected One Cloud to be, it's ahead of where they thought it would be. And so that's having a negative drag on revenue too, because they're going from one-time to recurring. So it's not unlike, I remember Chuck Robbins getting asked about this a couple quarters ago with the security business, because they only grew 7% when Palo Alto's growing 40. And he said, well, look, we got a declining hardware business that's offsetting the growth. If we extract Duo and those types of products out, we're right on par with them. And I think in some ways on these earnings calls, Jim's always almost got to start with One Cloud, talk about the growth of the cloud business, and then get into the bigger company. Because it's when you start with top line, you paint kind of a negative picture when in fact they did do some things well. I just think that there was so much overhang from the negative that it overshadowed it.
Well, let's switch over to RingCentral. RingCentral also announced this week, and they announced that revenue was up 33%, and they raised their full year guidance. One of the things that I found really interesting in the RingCentral news was how well they're selling into the Mitel base, and
Yes.
RingCentral has done several of these partnerships. They did one with Avaya, they did one with Alcatel-Lucent, they've done one with Atos. And the one with Mitel was a very different model, a very different approach, where RingCentral's doing a lot of the direct selling and using their own brand on that motion. And I talked to the RingCentral about this, and they feel that it's an evolved motion, and it puts a lot more responsibility on them. And they say that it's working, and so they're really penetrating that Mitel base the way that they had expected to. They also said that contact center deals are up and getting larger, up 34%. And quite a coup that they had pulled off. I didn't fully appreciate this. They did it at Enterprise Connect is when it popped on, when I realized what a significant deal it was. But they launched a mobile dialer app on AT&T this past year. And they're the first one to do that. I mean, Cisco just announced WebEx Go, and so they've got the similar offer with AT&T. Microsoft just announced the concept with Mobile Operator Connect Mobile, but RingCentral is the first, and I think that's really quite a feather in their cap to pull that off. They also indicated that they're expanding nicely into their API and CPaaS businesses. They announced a new Sonali Parekh as their new CFO, and she comes from HPE. We talked about this last week. I think Zias considers HPE the real HP. So,
I do.
So she came from there, and then they also promoted Mo Kadabeh. He was just hired. I think it was the COO. He was just hired as COO, and now he's the president of RingCentral. So he's on the fast path. I'm with Mo. What do you think, Zias?
Yeah. To me, it's I don't know. President and CEO is the same, but you're right. The partner seats they said now accounts for over 500,000 seats, which is pretty remarkable. I mean, that's a lot of seats. The Mitel ramp doesn't surprise me. I know whenever I talk to Mitel, their number one focus is, which is a bit strange, is to convert all their Mitel cloud customers to RingCentral. In fact, I talked to somebody that had gone to the recent channel partner show, and if you stop by the Mitel booth, they thought you almost thought it was a RingCentral booth, right? They were doing so much promotion for it. So this is a big initiative for Mitel. I think they've got some commitments they have to do to Ring, and and the other thing they got from Mitel was the CloudLink product, right, which actually speeds up the migration of Mitel customers. And I know that IP went over to RingCentral, and they're able to use that to migrate them over. So Ring's they're a $2 billion company now, right? They're not your small kind of niche UCaaS brand now. They're one of the major software companies now, and it's good to see them continue with their growth. So, but they're another one. They've continued to beat and raise, and their stocks fallen commensurately. So, it's just sort of the sign of the times, Dave.
Well, let's touch on 8x8. They busy week. Fourth quarter total revenue increased 25% year over year, and up to 181 million. That's including the Fuse revenue of about 24.1 million. They beat expectations. Sounds like they're getting into their groove now with Fuse. Let's see,
even if you extract the Fuse revenue, with Fuse they grew 55% ARR, and if you extract it, it's still 35% organic growth. I do know that one of the positive things from the quarter was that they expected a lot of churn from that Fuse base, and the Fuse customers didn't churn quite as fast, as much as they thought they would. Certainly helped them in the quarter. I know they're looking, the Fuse the traditional 8x8 customer base tends to be small market, mid market, where Fuse is more mid market enterprise. And I know 8x8's looking at that Fuse opportunity to be able to cross sell their XCaaS and CCaaS into that. So that's I think they're actually tracking. It's only been a couple quarters since they've owned them, and so I know they are looking though at trying to step on the gas there. I do think though that when you look at the growth of Fuse, it had really slowed down by the time they bought them. So this is something I think from an investor standpoint they got to be a little patient on, because it's going to bring the overall growth number of 8x8 down, because 8x8 was growing faster than Fuse, and so when you blend them, of course, it goes down. But I do think it presents a much bigger long-term opportunity. And to me, 8x8's kind of the interesting. If you like the secular play of cloud communications, 8x8 has their valuations much lower than Zoom and Ring and Five9, and they might be kind of an interesting investment opportunity here. If I also think they're a potential acquisition candidate too at their relatively small size.
I'm not sure about the acquisition piece, but I think they're doing really well. I think they're doing better than most people realize. They got they did that XCaaS launch, and that's going over really well. They just launched their agent workspace. They did front desk last year. They're in 50 countries now, so they've got a good CCaaS motion. They got a good UCaaS motion. They've got good global motion with something like 50 countries, which is pretty high in the UCaaS provider space. And like you said, they did the Fuse integration. That should probably start to pick up for them soon. So I think they're doing pretty well. It's nice to see that coming together. But reason I don't think they might get acquired is I'm just not sure who would acquire them. But yeah, I think overall their quarter results were pretty positive. I'm pretty
Yeah.
pleased.
And as a relatively small company, they rolled Fuse in pretty quick. That was faster than I thought they would. So, yeah, kudos to them.
All right. Well, that wraps up this episode of Real Time Recorded. We'll be back next week with week 20.